What happens when a taxpayer goes from reporting in the vicinity of about $267,000 of compensation to reporting exactly zero income? Not less, not I disagree, not here's a deduction, just zero. And what happens when that zero shows up not once, but across multiple years? The United States Tax Court had an answer to this one. Here's the numerical whiplash the court itself described. The original 2015 return showed the taxpayer was paid $267,000 in compensation for that year. Later, on 2015 Form 1040X, which is amended return, and the original Form 1040 for the later years, the petitioner reports zero income. The opinion doesn't give a filing date timeline for when those zero returns were submitted or filed, so we can't pin down the time gap from the transcript. But we can see the swing from about $267,000 to zero, a change on the order of roughly $267,000 for 2015 alone, at least in what is being reported on paper. And the court's bottom line wasn't sure close enough. The theme is sharper. Returns that say zero when income was earned can land you in penalty territory, and the IRS gets to keep collecting. My name is Dvorkin. I'm a certified public accountant in the state of California, and welcome back to our channel, where we review and analyze U.S. tax court cases so we can understand how U.S. tax law actually works in real life, when real people file real documents that sometimes make judges pause and then cite the Internal Revenue Code at them. And real quick, if you like breaking down tax court decisions in plain English, please like this video and subscribe. It helps the channel and it helps you avoid being the main character in one of those transcripts. In this video, we cover the tax court decision in the case of Lola Marie Hussey versus Commissioner of Internal Revenue, decided on January 8, 2026. So what's in this case procedurally? The transcript is a bench opinion, meaning the judge delivered oral finding of fact and opinion rendered at the conclusion of the trial. The court says it decided to render oral finding of fact of the opinion, and it reminds everyone that section references to the Internal Revenue Code of 1986, and rule references are to the tax court rule of practice and procedure. The judge also flags something important in very tax court. Except as provided in Rule 152C, this bench opinion should not be cited as authority. Translation for normal humans: this is the court explaining what it decides here, but it's not something you wave around like a published precedent in other cases. The case is described as a Section 6330D case. That's the part of tax law that lets taxpayer ask the tax court to review certain IRS collection determinations after an administrative hearing process. In other words, this isn't just do you owe taxes, it's also can the IRS collect and did they follow the proper steps. This assignment and scheduling history means because it sets the stage for how it ends. The judge says, by order served April 24, 2025, this section 6330D case was assigned for disposition to me. Then, after dealing with respondents, then pending motion to summary judgment, the court set the case for trial. By order served September 24, 2025. The case was set for trial in Dallas, Texas. Petitioners requested place of trial for January 8, 2026. So the petitioner asked for Dallas, the court gave Dallas. The court also noted that the standing pretrial obligations stayed in place, including the requirement that the parties submit a pretrial memorandum. Respondent filed one on January 13, 2025, and petitioner failed to submit one. That's not a small detail, because later when the petitioner tries to raise big constitutional sounding argument, the court basically says you didn't show up, you didn't brief in, and you didn't support it. Now the trial itself. The court states plainly, the trial proceeded as scheduled. The IRS showed up. IRS agent appeared on behalf of the respondent. The petitioner did not. There was no appearance by or on behalf of the petitioner. If you've ever wondered whether skipping your own tax court trial is a bold strategy, well, it's definitely a strategy. Bold is one word for it. Let's talk about what the IRS was trying to collect. The court describes notice of determination dated March 8, 2024, where the IRS determined that various collection actions are appropriate for the petitioner's outstanding liabilities for Section 6,702 penalties for years 2015, 16, 17, 18, and 19. These were assessed following the filing of petitioner's 2015 Form 1040X, which is amended individual return, and original Forms 1040 for each of the other years. So 2015 was amended with 1040X, the other were originals 1040. Then an important nuance. Respondent now concedes one of the penalties for 2016 and one of the penalties for 2017. So even the IRS backed off on two penalties, one each in 2 years, but the rest remained in dispute. The court frames the issue in two parts. First, whether each of the above referenced documents as described in Section 6,702. Second, whether respondent determination to collect the underlying liability is an abuse of discretion. And then the burden rule. Respondent bears the burden of proof with respect to the first issue. The petitioner bears the burden of proof to the second. Translation. The IRS has to prove the documents trigger the penalty rule. The taxpayer has to prove the collection determination was unreasonable or improper. Now the backstory. The court says little discussion is necessary, which is judge speak for this isn't complicated, it's just not good. The petitioner, Lola Marie Hussey, is described in her 2015 original return as a nurse anesthesiologist who provided services as an independent contractor during the year. The court added the key number. Her 2015 return also shows that she was paid $267,466 in compensation for doing so. The court also addresses how she described her occupation across the years. For many years, she identified her occupation as a nurse and even used initials CR and R, which the judge explains are initials commonly used to refer to a person's status as a certified registered nurse, Anesthetist. For 2019, her occupation was shown as non-privileged, which the judge says is not familiar to the court, but otherwise irrelevant to the findings made below. So we're not going to invent what that means. The judge didn't know either, and it wasn't needed. Now comes the corrected paperwork. The court says with the 2015 Form 1040X and the Form 1040 for each of the other years, petitioner submitted documents described as corrected Forms 1099, suggesting that previously issued Form 1099 show compensation paid her for each year in issue. The respondent's record confirmed the amount of that compensation for each year. In plain language, she attached documents calling themselves corrected 1099s, and the IRS record still showed she got paid. And then the court added a line that quietly blows up the whole I didn't get paid vibe. We note that petitioner has not denied receipts of any of the income attributed to her in respondent's records. That's huge. The court isn't saying she proved she didn't get paid. The court is saying she didn't even deny getting paid. The IRS evidence went further. The judge says respondent's evidence show, and we find that petitioner was employed as a nurse for each year in issue, and she was compensated for providing services as such during each of those years. And the court points to corroborating details. That fact of compensation for each year is further confirmed by withholding made from such compensation and contributions made to at least one retirement plan during the year. Those are the kinds of practical breadcrumbs that tend to follow real wages around. Again, just repeating what the court found here. So what did the petitioner put on the return at issue? The court says instead of reporting that compensation on the 2015 Form 1040X in each Form 1040 for the other year, petitioner reports zero income. That's the center of gravity for this case. Not a debate about the exact amount, not a dispute over classification, not I forgot a form, just zero. Before even deciding the made penalty question, the court adds another compliance point. Respondent's evidence further shows, and we further find, that before the assessment of each penalty, respondent complied with section 6751B, and that section is the rule about supervisory approval for certain penalties. In plain terms, the court is saying the IRS checked the internal approval box the law requires before assessing those penalties. Now we get to hear of the legal issue. Whether these documents fall under section 6702. The court says, next we consider whether the 2015 Form 1040X and the Form 1040 for each of the other years is described in section 6702. And we find that each document is so described. Then the court explains what the section 6702 requires using a quote-packed description. It applies if the person files what purports to be a return, which does not contain information on which the substantial correctness of the self-assessment may be judged. And the conduct reflects a desire to delay or impede the administration of federal tax law. Let me translate those phrases. What purports to be a return means it looks like a tax return. It's not a napkin, not a letter, not interpretive dance, though I'm sure someone tried. And the court says these documents clearly purport to be a return because they were prepared on a standard and publicly available Form 1040X or Form 1040. So they check that box. Next. Does not contain information on which the substantial correctness may be judged. That's the court saying if you put zero where real income belongs, the IRS can't evaluate the correctness of your tax calculations because the core numbers are missing or false. The court puts it plainly. By showing zero income rather than income actually earned, each document fails to contain information on which the substantial correctness of the petitioner's correct federal income tax liability can be determined. And then the intent-flavored requirements reflects a desire to delay or impede the administration of federal tax laws. The court explains why it concluded that element was met. It notes petitioner's 2015 original return shows that she is aware of her obligation to report and pay federal income tax on income earned, and her conduct in showing zero where the income should be reported on each return demonstrates her attempt to delay or impede the obligations imposed upon her by federal tax law. That's the court's connecting the dots. She filed a normal return once, so she knew the basic rules, and then later she filed a return that replaced income with zero. The holding on liability is direct. It follows that petitioner is liable for each of the penalties that remain in dispute, and we so hold. The opinion does not state the dollar amount of these penalties, so we're not going to guess them or act like we know what the balance was. But the petitioner had also attacked the collection determination itself. The court says the first amended petition filed October 31, 2025 challenged the notice because in some manner or another respondent failed to proceed as required by section 6320 or 6330. And section 702 is unconstitutional. That's a big swing, procedure plus constitutionality. Here's where the administrative hearing record matters. The court says the record shows that during the administrative hearing, petitioner insisted the respondent's settlement officer focus only on the underlying liabilities. The court even quotes the petitioner's own framing. She expected the hearing would focus on one issue alone, liability. And she told the officer not to raise other issues typically considered at such proceedings. The court cites an exhibit reference and then delivers the consequences. Because petitioner refused to have such issues considered at the administrative hearing, we will not consider her challenge to the process here. The court then cites a prior case, Magana versus Commissioner, dated 2002. In normal terms, if you won't let the IRS consider certain issues during the hearing, you don't get to complain later that IRS didn't consider them. The court adds a kicker. But if you did, we would find that respondent's evidence show that in all respects respondent proceeded as required by section 6320 and section 6330. So even if the court had reached the procedural argument, the court says the IRS still would have won on the facts in the record. The court also addresses any suggestions that a settlement officer didn't properly consider the underlying liability. The court notes, to the extent that the amended petition suggests that the settlement officer did not properly consider the underlying liability, we note that we did. And our review is de novo. De novo is a fancy Latin phrase that basically means the judge looks at the issue fresh, not just rubber stamping what the settlement officer thought. So the court is saying, even if you are mad about what happened administratively, the court itself examined liability. Now the constitutional argument. The court treats it as a technicality related to the existence or the amount of the underlying liability. But then the court calls it what it is in the record, nothing more than words on a page. The court continues, tax statutes are presumptively constitutional, meaning the default assumption is Congress's tax law are valid unless you prove otherwise. And then the court lists what the petitioner didn't do. Petitioner has offered no evidence on the point. She did not appear at trial to explain the basis for the claim, and she did not submit a pretrial memorandum in which argument in support of the claim could have been made. And so the court's conclusion is blunt. We consider petitioner to have waived her challenge to the underlying liability on constitutional grounds. Finally, the collection result. The court states it follows that respondent may proceed with collection and determined in the notice. And the decision line is to reflect the foregoing, except for penalties considered by the respondent, decision will be entered for the respondent. So what do we learn here? Besides the timeliness lesson that failing to show up to your own trial is not the same thing as winning. First, the court took section 6702 at face value. If you file something that looks like a return, but it reports zero income when the court finds real compensation existed, the court can view that as a document that doesn't allow the IRS to judge correctness, and as conduct that demonstrates an attempt to delay or impede tax administration. Second, attaching corrected Form 1099 did not change what the IRS records show, and the court specifically observed the petitioner did not even deny receiving the income. Third, if you tell the settlement officer the hearing should focus on one issue alone, liability, and you shut down everything else, you may not get a redo later when you suddenly want to argue the process. And fourth, if you're going to say a statute is unconstitutional, you generally need more than vibes, because word on a page plus no-show trial performance is not a recipe for success. My name is Alex Dvorkin. I'm a certified public accountant in the state of California, If you like this video and found this information useful, please like the video and subscribe to our channel. And I'll see you in the next tax court case review.